All right. Okay, hello everybody. So we just wait a couple of seconds to allow participants to log in, and then we'll have a quick word in Spanish for a Spanish audience. Okay. All right. Bienvenidos a todos. El webinar sería en inglés, pero si prefieren escuchar en español, por favor hagan clic en el botón de interpretación y así disfrutar la presentación de Ana en español gracias a la live interpretación de UT. All right. Okay, I think we can start now. So welcome everyone. I'm Loic, and I would like to, on behalf of the SCT Next Gen, would like to welcome you for this first webinar of the year. So our expert for today is going to be Anna Wilks, with almost a decade of experience as head of research for Neumann Café Gruppe and the head of also the NKG statistical unit. Anna has a background in economics, politics, and philosophy, and spent her entire career in the coffee industry. She worked both in research and commercial roles. So as the next generation of coffee professional, it's really important to understand what trends and insight are shaping the industry. So today we have the luck to have Anna that will be sharing her extensive knowledge and experience. And we hope you found the information presented to be valuable. Before we start, we encourage you to engage with the content and participate through the Q&A session, and Anna will answer at the end of the webinar. All right. So I think I'm done with this introduction, and I will now pass the floor to Anna. Thank you.
Thanks very much, Loic. Hi, everybody. Good afternoon or good morning, depending on where you are. Thanks for joining the webinar today. I'm just going to share my screen with you, and hopefully the right thing will pop up. So really, I've been asked to give you a snapshot of the supply and demand scenario as we have it right now. So what we're going to do is just go through the main, tenets of the supply and demand situation that we have in place at the moment. And yeah, we'll hopefully answer any questions at the end. So essentially, just to go really back to basics, I'd like to sort of talk about how we measure supply and demand. And there are some differences depending on different coffee analysts. By and large, it's very similar, but there are some differences. But just to recap what we're talking about here. So when we talk about production, how do we tend to estimate production? Well, before the crop is harvested, we look at various factors like weather and other factors such as input prices, very relevant recently, to see what and cyclical factors, of course, to see what the potential crop looks like ahead of harvest. And then once the crop season begins, we start to validate those estimates through a reconciliation of what we think was domestically consumed plus what was exported, anything that was imported. And then in some countries which tend to hold varying degrees of stocks from one year to the next, we also do a stock reconciliation. And so essentially we end up with a final measure of production. And you can see that production, global production has, follows generally a cyclical pattern that tends to mirror the pattern of the Brazil crop, and in particular the Brazil Arabica crop. So those peaks there that you see in global production tend to be when Brazil produces a bumper crop. And then in terms of the demand, what do we mean when we talk about demand? So in terms of looking forward, we would forecast using the past level of demand plus a forecast of growth dependent on various factors. But as you can see, demand has seen a much more linear kind of growth if you go back pre-pandemic, if you went back 5 years, 10 years, 30 years, it was growing at around 2% per annum, just over. But then we come to some estimates, and then as with the production during the period in question, we validate it with what we call disappearance in non-producing countries, which is essentially monitoring the net level of imports of coffee, so imports less re-exports, adjusting for stock data where that's relevant, like in the USA. And then in terms of years when we see production exceeding the demand, we tend to get surpluses and of course deficits the other way around. And you can see that when you have the big Brazil bumper crops, you tend to get pretty large global surpluses. And the year in question, the season we're in right now is the 22-23 season, and as you can see, we're in a second year of consecutive deficit. So we'll come back to this later on in the presentation, but that gives you an overview of the broader historical context of the supply and demand picture. In terms of looking at the supply side of the equation, as you'll have seen, we are in terms of production in a period of really below trend global production. So essentially, the global production in this current season, 22-23, is below trend for the second year in a row. And both these production levels here, both this year and the previous year, the decline has really been driven by subpar or well subpotential Brazil Arabica crops, owing both to dry weather and, in the case of the 22-23 crop, also to some frosts that occurred in July 2021. And also in this period, Brazil wasn't able to produce anything like its potential, and then other Arabica producers were also not really able to increase their production. And it's really more of an Arabica story, because when you separate out the Arabica and the Robusta production, you can see that in relative terms, in this short term, the last few years, Robusta production has been much more stable. And then when we look at what's happening on the exports out of producing countries, it's a slightly different story because of the pandemic and the logistics crisis that we've had. So essentially what we had is, despite the fact that we had very high production in 2021 because of the Brazil bumper crop, the pandemic and subsequently the logistics crisis meant that we saw really quite a big decline in the pace of exports largely through 2021. And then, somewhat paradoxically, as we move into this period of low production here in 2022, we also see an improvement in the logistics scenario, which then means that despite this low production, and as you saw in the previous chart, this kind of deficit situation, we've had a real acceleration of global exports until quite recently. More recently, they've started decelerating again, but you can see that big surge, which has actually occurred during a year where we've not really had enough supply to cover demand. And so in large part, that whole picture is framed by Brazil. So let's look at the supply side of Brazil in more detail, and then we'll look at the other main types of coffee on the supply side. So as we've already mentioned, the 22-23 Brazil Arabica crop was compromised first by frost and then by dry weather. But despite the compromised crop, when we look at the export pace so far in the 22-23 Brazil season, which is July-June, we see that from July, this is exports of Arabica here, we see that from July through to November, we actually had a fairly strong export pace. But then by the start of December, the season peak had passed, and local prices saw a really sharp fall through October and November, and that really deteriorated the liquidity and has led to this kind of decline in export pace. When we look at prices in Brazilian reais, these are benchmark prices here, blue for the Arabica and orange for the Conilon. you see that through October, November of 2022, we saw a really sharp decline in Brazilian real prices. And that was both because the market, the New York market, declined sharply in that period, but also because the Brazilian currency strengthened in that period. So in terms of reais, we saw a really, really sharp decline, and that did lead to a very sharp decline in the liquidity. And that deterioration of liquidity then intensified in January because farmers were looking at the prospects for the 23-24 crop, which was on the trees, and observing that maybe the cherry volume on the trees wasn't quite as good as they expected it to be when they first saw the return of rainfalls in October, November last year. And so the Brazil Arabica farmers that are still holding the remaining 22-23 crop tend to be the better capitalized farmers, and prices, you know, in the range of 900 to 1,000 reais just simply aren't attractive when they look back at that kind of 13 to 1,500 level that they were able to sell coffee in the second half of 21 and through most of 2022. So that's really the level that they're looking at. So in January, as the market stayed relatively low, the FOB Brazil differentials have had to really do a lot of the work to strengthen really to historical highs and premiums against New York in order to try to boost the level of the local price to a level where farmers were willing to release coffee. And so in February so far, we've obviously seen an increase in the New York price, and that's given the local price a little bit more of a boost. But we're still really talking about local prices just above 1,100 reais in terms of the benchmark, which is, as I said, is still very far from that kind of target level. So in this context, the expectation is that we'll continue to see a sort of lower pace of exports through February and through to the end of the season in June, both given the fact that we've already seen quite strong exports so far, but also because, you know, unless we really get up to these target levels, we might see a fairly muted release of those stocks. The other thing to be mindful of is that last year, during sort of January to June, so the second half of the Brazil 21-22 season, we saw really high exports. And that's not because the crop was good, it's because the logistics materially improved. So when you compare the export levels this year with last year, you have to be mindful that last year exports between January and June were really pretty high, and they're almost as high as they were the previous year when Brazil had a bumper crop. So it's not necessarily a good gauge of how much lower this crop is in relation to the last few crops. When we move on to talk about what's happening in terms of the washed Arabica, unfortunately, we really have seen a very low trend of exports out of Central America continuing into 22-23. So 21-22, we saw pretty low export pace out of Central America, and generally our Central America, Asian Arabicas as well, and Colombia, of course. And that's continued so far in 22-23. In terms of the Central American crops, that work that we do validating our production assessments based on the export flow, we're kind of too early into that process to really say anything meaningful at this stage. But certainly there's not you know, we're not seeing any signs so far that we've got any sort of year-on-year increase in volumes. We had penciled in a bit of an increase potentially on the horizon for Honduras. There isn't really any evidence yet that we're seeing a higher year-on-year flow, but of course we have had some delays, and you know, through January we did have a much lower price level as well. So still potential for slight recovery, but I must say it is looking dimmer by the day. On top of which, in Colombia, we always knew that the main crop that was harvested at the tail end of last year, 2022, was disappointing. And then really, it's just been too consistently wet for us to really expect a meaningful improvement for the upcoming Mitaka crop, which forms the second half of the Colombia 22-23 season. And when we look at the export performance out of Colombia, it's incredibly disappointing. If you look at that shaded green areas, that is the kind of 5-year range. So we're well outside that, even though Colombia is importing record amounts of coffee at the moment. So really no prospect of recovery year on year there at the moment for 22-23. At best, we will see an unchanged year on year production at best. And in that context, we continue to see really firm differentials for washed Arabicas. Simply, we just haven't seen any improvement in supply to really create a meaningful decline to what have been pretty high historical differentials. So that's continued. And then when we look at Robusta, it's a slightly different story. So in the midst of the high Arabica prices and the high Arabica differentials, Robusta exports have seen a really, really strong recovery, particularly as the logistics crisis eased out of Asia in particular. And so when we look at the export performance, there we go. You can see really from the start of 2022, that huge surge in the rolling pace of Robusta exports there until pretty recently. And what we also observe in this period is that we haven't had a meaningful increase in Robusta stocks at destination in places like Europe and the US and Japan. So it implies that coffee's gone straight through, and therefore that the Robusta share of demand has also seen a huge climb, which is, somewhat unsurprising in the current economic context, with consumers potentially opting to buy cheaper blends. And in terms of what's happening with differentials, it's certainly relatively more stable compared to Arabica. And what we see is that Vietnam continues to be the most competitive Robusta in terms of FOB, and consequently, the main driver of that surge in the export pace we saw through 2022 has been Vietnam. Although Indonesia is close behind, Indonesian shipments have been pretty strong in the last few months in response to this period here in mid-2022, when they actually were trading at slightly more competitive differentials to Vietnam. Meanwhile, exports out of India and Uganda, which were actually much better while Vietnam wasn't able to ship so much through 2021, have been declining. And Conilon exports continue to be very low, despite the fact that we believe that the 22-23 Conilon crop was a record crop, and that the lack of exports is really through competitiveness in terms of the differential here, still very, very high, and therefore uncompetitive in relation to other Robustas. But internally, we believe that a lot more of it is going into internal consumption because of the price of Conilons relative to Arabicas. And much like in Arabicas, the remaining stocks of the current crop are resting with, generally speaking, well-capitalized Conilon farmers who, again, for whom the current price level isn't necessarily attractive enough to release good volumes of coffee. And Vietnam, has seen a really strong export trend. The red line here is the last season. You can see second half of last season, really strong exports as the logistics improved, and it's continued into this year. The difference is that for the 22-23 Vietnam crop, we believe that crop is lower year on year. So the shipment pace for the remainder of the year is very likely to tail off, even if Vietnam is able to ship some of its carryover to assist. And again, as with Brazil, the export pace will likely come in much lower year on year, but last year's export pace wasn't necessarily indicative of last year's supply. It was also indicative of this kind of timing issue where suddenly Vietnam was able to export in a much more orderly fashion. So there was a kind of catch-up element involved there. When we look at the demand side of the equation, now that we've looked at the supply side, so as we mentioned, we look at something we call disappearance as our main measure of demand in non-producing countries, which is, you know, over 2/3 of the total. And so for every single market, we're tracking the imports less the re-exports of coffee. And what we found over 21-22 is in the same way, so in the previous season, in the same way that we saw that exports were able to recover, we also saw that trend in the imports. So essentially the import pace or the disappearance pace in the second half of 21-22, so this red line here, you can see it was low for the first half and then pretty high for the second half. And that essentially led to very, very strong growth in disappearance over the course of 21-22 of something like 3.4%. Now, we don't consider this as a face value rise in underlying coffee drinking, but again, a catch-up of delays resulting in imports that should have come in. Some of those coffees should have come in 2021. So the 2021 disappearance was kind of overly low, we think, in relation to the actual underlying kind of coffee drinking that was occurring. So again, for this year, we are seeing, you know, so far, the disappearance running at the top of the range. And this is a sort of continuation of what we saw here in the last month. So there was a kind of big surge of exports from producing countries, and that's still making its way to destination in a somewhat kind of delayed fashion. And so the other important thing to say is that really by the end of September 22, we believe in global terms that we were pretty much back up to the pre-pandemic level of just shy of 170 million bags of global demand, albeit some 6 million bags below that kind of pre-pandemic growth trend that we had in place. And what do we expect for the 22-23 season? Well, despite the kind of strength you can see in the first quarter here of disappearance, we currently expect a flat picture overall. And that's because in the second half of the period, we expect, as with a lot of the exports, we expected the disappearance to come in well below last year's. And within that kind of flat outlook, there's a lot of complexity because different markets are doing different things. But essentially, overall in non-producing countries, we see a small decline in disappearance, particularly in Europe. And again, not necessarily because of lower coffee drinking, but more because last year's growth was kind of overblown because it included that kind of delayed coffee. But we do expect some growth in demand and in import disappearance in emerging markets and producing countries, and particularly in Asia, which has continued to be strong through the pandemic and beyond. But the important thing is that we're still seeing huge month-on-month volatilities in these numbers because we do see still logistical upheaval. I mean, the US is a good example where every month we see just this huge volatility in the imports net of the GCA or the US stock changes. You can see here, the green line is what happened last year, and you can see it's kind of all over the place. And so far, we had very high October, followed by extremely low November. So clearly, that upheaval is not really related to, you know, short-term changes in demand. It's much more related to the kind of stunted way in which the coffee is flowing in. And the other thing to say is that this time last year, you know, at the end of February when the war broke out in Ukraine, our early expectation was we were going to see a really pretty significant decline in the net import flows into both Russia and Ukraine, and then the demand. And actually, the data indicates that the decline in net import flow and demand is only a few percentage points in 21-22, and it's continued so far in 22-23, where, you know, at the start of the war we had thought that as much as we could see as much of as a 20 or 25% decline there. So that's some good news in terms of the resilience of that demand. So having talked about the supply side and the demand side, let's go back to looking at those surpluses and deficits that we were looking at the very beginning. So here what we've got is the green bars show you the surpluses and deficits that we showed you in the first slide, and then we've overlaid it here with this blue line, which is global stocks expressed in weeks of demand. So global stocks to use to overlay here. And essentially, drawing your attention again to the fact that we're in a second consecutive deficit year. So we had a very large surplus in 2021. And now what we've had is 2 consecutive deficits that have wiped out that surplus. So essentially, we've completely used up, by the end of 2023, we'll have completely used up that 2021 surplus. And what that means is that stocks to use, or stock ratios, really are languishing near recent historical lows. Now, looking ahead to the next year, which is, of course, you know, very, very important for the long-term kind of for the long-term outlook. Back in October, November, we expected that Brazil had the potential to produce a pretty high Arabica crop, and you will have noticed in the, you know, when we first sort of showed you the dynamics of the production and the demand, is that when you have a high Brazil Arabica crop, you tend to have a global surplus. So all other things being equal, we were looking at a Brazil Arabica crop somewhere in the high 40s, something like 47 or 48 million, which would have given us, all else being equal, a global surplus of around 4 million bags. So now what we have is a slightly different scenario, because through the second half of December and January, we've had these pretty unusual weather conditions in Brazil at what is still a pretty delicate phase of the crop development. So we were happy that the rains had returned to the growing areas, but the rains have been very heavy. They've been very continuous. They haven't been marked by periods of hot, sunny weather, which is what the coffee tree really likes. So the kind of pattern of rainfall and volume of rainfall has meant that the cherry set has been not as good as we expected, and that has tempered the year-on-year recovery of the Brazil Arabica crop. So we believe the crop will still be higher year-on-year, but much less so. So we're looking much more in a low 40s kind of figure at the moment. So essentially, you know, that's a 4 to 5 million bag decline in prospects, which means that instead of a surplus, you know, we've essentially removed that surplus expectation. So the balance of probabilities for us now suggests more of a balanced scenario. It's really important at this stage to say that we can't have too much confidence in that scenario, because there's still a lot of moving parts and many underlying assumptions. For example, the 23-24 crops in most other countries are only just flowering right now. So we have to make some, you know, assumptions about the extent of any year-on-year recovery in those other countries. So that's an unknown, and the extent of demand growth is also very difficult. You know, pre-pandemic, you would quite confidently build in 2% growth and be relatively confident that you would get something close to it. But the fact of the matter is that in terms of the overall performance netted across the last 4 years to 22-23, we've had flat demand growth. So, how much growth we'll see in 23-24 in global demand is still up for debate. We are building in some growth, something like a historical norm of 2%, but every 1% you build in is almost an extra 2 million bags of extra consumption. So for us, at the moment, the balance of probabilities is for a more balanced scenario. So essentially, the chance that the market can really have a global surplus does seem to be very, very remote. And in this context, if we don't have a global surplus, then essentially it's another year where we are languishing in terms of global stock ratios towards the bottom of this range here. And the danger with that is that there's very little wriggle room if we have any production shocks ahead. So it's another year of fairly nail-biting coffee supply and demand dynamics. So with that, we've come to the end of the slides. Might pass it back over to Loic to see if anybody's asked any questions.
All right. Thank you very much, Anna. It was full of interesting insights, and we already have a few questions. And the first one would be, we'll start more on the demand side. And I think the audience would like you to elaborate a bit more again on disappearance. Does disappearance equal consumption? Is it slowly calculated by change in stocks, or can you elaborate a bit more?
So I guess the first thing to say is, in an ideal world, we would like to count every cup of coffee drunk and add it all together and have a real idea of what's happening with global demand. But it's very, very difficult to do that. You can start to pull together various bits of information like scanner data and sales data from different, so you've got the retail, you've got the out of home, and even before the pandemic, it was very, very hard to try to get a full picture. And then during the pandemic, because we've had this huge shift in consumption in the home and out of home, just trying to capture what's happening with those moving parts is extremely difficult. So the only thing that we can consistently measure month after month after month is how much coffee has gone into each country and how much coffee has come out. So that kind of net. And then in places like the US and Japan, every bag of coffee that arrives on shore has to be cleared for imports at that very moment. So clearly, if we have a stock build, we have to take that away from the equation. And that's why we call it disappearance instead of net imports. But it's essentially a way of measuring what coffee we can no longer see. And so month to month, that's never going to tell you what's happening with coffee consumption. But over the medium term, 6 months, 12 months, it will give you a really good idea of what is happening on a global level. And unfortunately, because of the pandemic and because of the logistics crisis, that has become much, much harder recently. So we're having to do 2 separate jobs. We're having to say, well, this is what we think is happening to coffee drinking. But on top of that, this is how this is how the flow might have been affected by logistics. But unfortunately, it's the best kind of month after month measure we have to try to track what's happening to demand around the world. And of course, we're assuming again that people buy just in time, and therefore that stocks don't accumulate in roaster warehouses, retailer warehouses, which again, in the context of the logistics crisis, is another potential area of complexity that we again have to ask ourselves, is that really still a relevant assumption? But over the course of the longer term, I think we can be pretty sure that it will give us a good measure of what's happening.
Good. And all that bring you to a global, basically a global flat demand. But how would you split it in terms of Arabica and Robusta?
So what we've been observing is definitely that Robusta demand has been increasing, because we can see that exports of Robusta have been going up a lot, and stocks of Robusta have remained fairly, have been slowly declining or remaining fairly low. So we know that Robusta demand is increasing, which, as I said, is not really a surprise. Meanwhile, on the Arabica side, we have seen, a kind of lower export pace and a less kind of declining stock picture. So that's really how we try to assess what's been happening within the two different sides of the two different types of consumption. But another thing to say is that we do see as well that through 2022 there were huge Robusta exports because they couldn't be exported in 2021. So whether that kind of implied huge Robusta share is real or not is another question.
Mm-hmm. All right. And if you go back on your slide of the supply and demand, we saw the weekly usage stocks increasing despite the fact that there is two consecutive deficit at the very end. What importance would you give to that signal? Is it seasonal? How yes.
So yeah, well spotted. Whoever spotted that. So really, it's a slightly complicated one, but essentially, when we had that really big Brazil 2021 crop, and we essentially had this big surplus because we were in the middle of a pandemic, we kind of, because the other thing we do is we look at what's been exported and then by country, and then we look at whether we can see it in the import figures, right? And in generally speaking, once coffee global exports, about a few months later, you see them appear on the imports. And suddenly we saw this big gap. And essentially what we think is that coffee was exported and then it just spent a lot longer getting to the import stage, destination stage than normal. So what that meant is that there was just a lot more coffee in the system. And so now what's happening is a lot of that coffee's turning up, a bit like when you order something, because you really need it, and then the delivery's delayed, and then basically it turns up when you no longer need it because you've gone to the shop and bought it. So it's a similar kind of thing that's happening. So we're still seeing the kind of after effects of that, which is why the stock ratios move slightly differently to the deficit. The other thing to bear in mind as well is that a crop year is not a finite period of time because it relates to different seasons in different countries. So it's July, June in Brazil, it's October, September in Vietnam. So it's very hard to marry up the surplus or deficit with the stock changes because you're not dealing with a finite period. Okay, very nice. And in terms of region, again, on the demand side, would you see a big region to keep an eye on? What region in the world do you think is going to drive or to reduce that? Well, what we saw before the pandemic is that the highest growth regions were Asia and Middle East. And then during the pandemic, we saw a lot of the mature markets consumption falling, but we still saw Asia and Middle East growing, albeit at a lower rate than before the pandemic. And then as we're coming out of the pandemic, we're still seeing those regions grow. So by far the biggest growth contributors to global demand in the last 5 years have been Asia and Middle East. And there's no reason to think that trend won't continue into the next couple of years. Good. And I think here we have a last question. How do you interpret the recent drawdown in the ICE stocks and from the previous months ago as well? So essentially, my interpretation is that we saw, a sharp decline in the certified stocks in, August, September, which there were different interpretations of what that meant. But essentially what we saw through November, December, and January is a lot of that coffee being put up for grading again. So we believe that a lot of the decertifications reappeared as grading. So essentially a lot of that decline is netting off as we increase the stocks again, albeit that not everything passed, so the increase is more modest. So really the recent volatility is much more to do with that operation of decertifying and recertifying, but we've now that seems to be finished. So we're now in a period where, given everything we discussed just now of that kind of liquidity constraints on the export side out of Arabicas, both in washed and in Brazil, just last week, I think we saw, 42,000 bag decline in the certifieds, and with the high differentials out of on an FOB, the reality is that that coffee represents good value. So it's that trend is, I guess, likely to continue.
Yes. So you rather see now a real disappearance of these stocks and the usage more than regradings again, right?
I guess so, yes. But we'll have to see, because this has happened a few times already.
Yes.
So.
All right. I think I can say thank you right now. It's been very insightful. So on behalf of the full Next Gen community, I think I can again say thank you, and I will end the call. I will just say a little things to the crowd. Save the date, because in May the Next Gen is going to Italy, organizing a trip to discover the roaster side this time, and you will receive an invitation very soon. All right. So thank you, Anna, again, and see you soon.
Thanks for having me.
Pleasure.
Bye.